IRS just quietly snuck in a pre-Thanksgiving Day surprise for taxpayers. And I think we all dodged a bullet on this one. So you know that new tax rule that took effect this year that required all of us to report on our taxes any business income over $600 from like Venmo or PayPal or Cash App? Well, the IRS just put out this new notice that says, let's just hold off another year. What it actually says is the IRS has decided not to enforce the $600 business income threshold for those digital payment platforms this year, and has instead decided to turn 2023 into another transition year, just like 2022. So the old rule will still be in effect for this taxable year. That means when you go to file your 2023 taxes in April, reporting will not be required unless the business taxpayer receives over $20,000 and has more than 200 transactions in 2023 through one of those digital payment systems. Now, I want to make something really clear. Regardless of the income threshold rules, whether it's $20,000, $600, or $1, you are required to pay taxes on all business income, regardless if it comes from a check, cash, or digital payment platform. What the IRS is just saying now is they won't be enforcing the $600 threshold this year. And that's not all. The IRS also said next year in 2024, they are going to sort of ease us all into this massive change. So instead of going straight from $20,000 to a $600 threshold for reporting on business income through those digital payment systems, the threshold will be a little closer to the middle at $5,000. So before I go any further, I know this may be a little confusing, so if you want to read the document from the IRS, I will email it out to you tonight in my Newsgirl News Roundup email, so make sure you sign yourself up. So how did this all come to be? Well, Congress passed a law back in 2021 that says those digital payment apps like Venmo, PayPal, or Cash App would be required to report payments of more than $600 of sales of goods and services on what's called a 1099-K form. These forms go to the IRS and to you, so you know what those companies told the IRS you received through their platform. And that way you can fill out your tax return accurately. Now, this 2023 delay that I'm talking about in this video doesn't change what taxes anyone owes. It just changes what online platforms have to report to the IRS on those 1099-K forms. So why is 2023 another transition year? Well, honestly, the IRS says people were confused. Taxpayers, tax preparers, and those payment processors were all telling the IRS this was going to be a total cluster at tax time. So instead of just jamming through this $600 requirement that Congress set, the IRS decided to use 2023 as another transition year and then phase in the requirement starting in 2024. Now, in case you're freaking out about this, please understand, this is for business-related transactions only. Reporting requirements do not apply to personal transactions at all. So if someone gives you cash for your birthday or a holiday gift through Venmo, PayPal, or Cash App, or you split a meal and send your friend your half of the bill, or you split your bills with your roommates, none of that needs to be reported to the IRS. But the casual sales of goods and services, including things like reselling concert tickets or selling used personal items like clothes or furniture or other household items for a loss, is now considered business income and could generate one of those 1099-K forms, even if the seller has no tax liability from those sales.